All right, Talk Tickers listeners, get ready, because we are diving deep into Wynn Resorts Q3 2024 earnings call.
Deep dive is right.
Fresh off the wire from November 4th.
Oh, yeah.
We got the transcript right here and some key stock info to really break down. Think of us as your earnings call decoders.
Decoding is a good word for it because between Vegas, Boston, Macau, and that big, that shiny new project in the UAE, there's a lot to unpack.
Okay, so first things first, Vegas. So it sounds like the high rollers are still rolling in, but Wynn is facing some tough comparisons to last year's really phenomenal performance.
You're absolutely right. CEO Craig Billings he emphasized that while demand is there from the luxury segment, it's healthy. But those year-over-year numbers, they might not be as flashy this time around. But you know what really caught my eye? That 3.5% jump in retail lease revenue.
Ooh, that's juicy. Retail lease revenue, tied to luxury spending being up. That tells us a couple things. First, the luxury market, pretty resilient.
Yeah.
And second, Wynn is strategically placed to, cash in on that.
Precisely. Their focus on creating these top-tier experiences, I think it seems to be paying off. Now, let's hop over to Boston. Encore Boston Harbor had a solid quarter with EBITDA up 4% year over year.
Yeah.
Especially impressive considering, they managed to keep costs down even with those union-related payroll increases.
Yeah, that's a testament to their operational efficiency over there. Encore Boston might not be as flashy as Vegas, but it's definitely a key part of Wynn's diversified portfolio.
Absolutely. Steady, reliable earner. Now let's talk about the comeback kid, Macau. EBITDA surged 3% year over year, fueled by strong wins in, those mass table games and slots.
Nice.
But, let's not forget, this is a battleground. Competition is fierce.
So how is Wynn playing their cards in this high-stakes game?
They're not just chasing market share. They're laser-focused on profitability.
Okay.
Think revamped dining experiences.
Okay.
They've been busy reimagining some venues at Wynn Palace. They've got a new restaurant called Drunken Fish at Wynn Macau. And get this. A destination food hall is planned for Wynn Palace in mid-2025.
Wow, they're really appealing to the foodies.
Yeah.
So it's not just about gambling anymore. It's really about the whole experience.
Exactly. They're also doubling down on exclusivity, expanding their chairman's clubs at both Wynn Macau and Wynn Palace.
Hold on. Paint a picture for me. What exactly a chairman's club? Is it like a VIP lounge on steroids or something?
Think private gaming salons, personalized service, perks you wouldn't believe.
Right.
They're basically rolling out the red carpet for their most valuable customers. It's all about that top-tier, personalized luxury experience.
So they're going all in on catering to the whales.
Yeah.
Smart move. What else is on their Macau agenda?
Longer term, they're making big investments, strategic investments in an event center and a brand new production show at Wynn Palace. These are big bets designed to attract even more visitors and really solidify their presence in Macau's future.
It sounds like they're playing the long game, not just reacting to the current market, but like actually shaping it.
Precisely. And that brings us to the elephant in the room. Their massive gamble in the UAE, Wynn Al Marjan Island.
Right.
A multi-billion-dollar integrated resort that's already making serious headway.
This is the first land-based gaming license in the UAE, right?
Yeah.
So a whole new world is opening up.
You got it. Construction is well underway. They've hit the 24th floor, and over 3.6 million square feet of concrete and steel are in place. Wynn is projecting the UAE to become, get this, a $3 to $5 billion gaming market.
Wow.
That's a potential gold mine.
So the stakes are high. What are the risks and rewards at play here?
The potential rewards are enormous. A brand new market with a thirst for luxury.
Yeah.
But, let's not sugarcoat it. There are risks. It's uncharted territory with unique regulations and cultural nuances. There's also the threat of oversupply if other operators flood in.
It's a calculated gamble.
Yep.
But if Wynn can successfully, transplant their luxury DNA into this new market, the payoff could be huge.
Agreed. Now let's talk money. Wynn just made a major move that speaks volumes about their confidence. They increased their share repurchase authorization to a whopping $1 billion.
That's a serious statement. What does that signal to investors?
It shows they believe their stock is undervalued. They're putting their money where their mouth is, essentially saying, we think our future is bright, and this is a good time to buy our stock.
So they're not just building fancy resorts, they're also actively returning value to shareholders. All right, let's zoom out for a second. What are the key takeaways from this earnings call?
Wynn is facing some challenges. Tough comparisons in Vegas, intense competition in Macau, and the uncertainties of their UAE venture. But they're also making bold investments, expanding into new markets and doubling down on their luxury positioning. They're betting big on the future, and they're not afraid to take risks.
Okay. But what should we be watching for as Wynn, charts its course in 2025 and beyond? What are the key factors that will determine their success?
There are a few things to keep an eye on. First, can they maintain their strong performance in Vegas despite those tough comparisons? Second, how effective will their strategy be in that cutthroat Macau market?
Right.
And third, will their UAE gamble pay off? These are the million-dollar questions.
Got it. So it's a mixed bag of opportunities and challenges. Wynn is certainly not playing it safe. They're making bold moves that could lead to massive rewards, but there are also risks involved. And as always, it's up to each investor to decide if Wynn aligns with their investment goals and risk tolerance.
Before we move on to part 2 of our deep dive, are you ready for some fun with our This Is Not Financial Advice segment?
Always. Time for some wild speculation. Remember, folks, this is purely hypothetical and for entertainment purposes only.
Yes.
We are not financial advisors,
Here.
and you should always do your own research and consult with a professional before making any investment decisions.
Disclaimer delivered loud and clear. All right, hit me with that outrageous yet plausible trade idea.
Okay. Let's say you're feeling really bullish on Wynn's UAE gamble. Maybe consider buying a long-dated call option on Wynn stock. If that $3 to $5 billion market prediction comes true, those options could print money.
Whoa, now, that's a spicy one. High risk, high reward.
Exactly. But hey, it's a gamble, right? Just like Wynn's bet on the UAE.
Yeah.
The point is to think outside the box and consider all the possibilities.
Just remember, folks, options trading is not for the faint of heart. Do your due diligence, understand the risks, and don't bet more than you can afford to lose.
Couldn't have said it better myself. Always gamble responsibly.
Now that we've had our fun, let's bring it back down to earth. Stay tuned for part 2 of our Wynn Resorts deep dive, where we'll analyze the company's stock performance. See you soon.
Welcome back to Talk Tickers. Let's continue dissecting this Wynn Resorts earnings call. One thing that really struck me was Wynn's laser focus on the luxury market. They're not trying to be everything to everyone. They're really doubling down on what they excel at, crafting those unforgettable high-end experiences. Yeah, it's a smart move. Luxury consumers tend to be more resilient during economic downturns. They're less price sensitive. And Wynn is tapping into this by weaving luxury into every facet of their business. From the opulent resorts to the world-class dining and entertainment.
Exactly. And that's evident in their Vegas performance. Despite facing those tough comparisons, their high-end clientele is still spending. That 3.5% uptick in retail lease revenue, it really speaks volumes.
Absolutely. They're drawing in the big spenders.
Yeah.
And that luxury focus, it extends to their Macau strategy as well. Revamped dining, expanded chairman's clubs, a planned event center, a brand new production show. They're pulling out all the stops to attract and retain those high rollers.
Precisely. It's about creating an aura of exclusivity and exceeding expectations.
Right.
And let's not forget their audacious move into the UAE, building a multi-billion-dollar resort on a man-made island. Talk about aiming for the stars.
Okay. It's a bold move for sure. Wynn is banking on their luxury brand, resonating with that affluent clientele in the UAE. And if their $3 to $5 billion market prediction holds even a little bit of water, it could be a game changer.
Yeah, it's a calculated risk, but with great risk can come great reward. Now let's shift gears and examine Wynn's stock performance. Looking at the data provided, Wynn closed at $95.65 on November 4th.
So down slightly from the previous day, but what's the bigger picture?
Zooming out, Wynn's stock has been on an upward trajectory over the past year. Their 52-week high is $110.38, while their low sits at $71.63. They're currently trading closer to their highs, which is a good sign.
Okay, so the stock's been on a decent run, but what does this tell us about investor sentiment towards Wynn?
That $1 billion share repurchase authorization, it's a strong indicator. It suggests that they believe their stock is undervalued, and they're willing to back that belief with cold hard cash. That's a positive signal for investors.
Right, it demonstrates confidence in their future. But as always, there are risks to consider. The gaming industry is cyclical. Economic downturns can put a damper on consumer spending, and competition is always lurking.
You're spot on. There are company-specific risks, too, The success of their UAE project and their ability to maintain strong performance in Vegas and Macau, that's crucial.
So investors need to weigh those risks against the potential rewards. Wynn is a well-established company with a proven track record. They're making strategic investments and expanding into new markets, but there are no guarantees in this game.
Now let's dive into some analyst coverage. It seems there were some misses on both earnings per share and revenue for the quarter.
Yeah, the data shows earnings per share missed estimates by 17.88%, and revenue fell short by 1.99%.
Yeah.
Not exactly stellar numbers.
These misses, they definitely contributed to that slight dip in the stock price. But it's important to remember, past performance doesn't dictate future results. Investors need to analyze the company's long-term prospects and weigh those against the short-term hiccups.
Right. It's about seeing the forest for the trees. And speaking of the broader picture, there's been a lot of buzz surrounding Wynn's Q3 earnings. Reuters reported that Wynn missed both profit and revenue estimates. Tip ranks highlighted their financial results. And the Motley Fool even published like a transcript of the earnings call.
There's a wealth of information out there. The key is to absorb it from multiple sources. Form your own opinions. Don't just blindly follow the headlines. Dig deeper. Understand the nuances.
Absolutely. Informed decisions are the best decisions. Let's get back to the earnings call transcript. What other nuggets of wisdom can we unearth?
Wynn CEO Craig Billings mentioned they're exploring potential greenfield opportunities in, attractive gateway cities. This suggests they're not content with their current footprint. They're actively seeking new avenues for growth.
They're thinking big picture, looking beyond the immediate horizon and positioning themselves for long-term success. That's the mark of a company with ambition.
And he highlighted their strategic land banks in each of their markets. These land banks, they offer additional development opportunities down the line. They're playing the long game, ensuring they have room to expand and evolve as the gaming landscape shifts.
It's a smart approach. The gaming industry is constantly evolving.
Yeah.
Companies that fail to adapt and innovate, they risk being left behind. Wynn seems determined to stay ahead of the curve.
Now let's talk about their capital allocation strategy. They're returning value to shareholders through dividends and share buybacks, while simultaneously investing heavily in their properties and new projects, like the one in the UAE. It's a balancing act.
They need to find that sweet spot, the right mix of investments that will fuel long-term growth while keeping their shareholders happy. And it seems they're committed to doing both. They just increased their dividend to $1.25 per share, and boosted their share repurchase authorization to $1 billion.
Those are significant moves. They're putting their money where their mouth is, demonstrating their commitment to rewarding shareholders, and it also hints that they believe their stock is currently undervalued.
It's a strong signal of confidence. So how should investors interpret these actions? What do they say about Wynn's outlook on their future?
It paints a picture of strength and optimism. They're generating enough cash flow to fund their growth initiatives while also returning capital to shareholders. That's a pretty enviable position to be in.
It suggests they believe the best is yet to come. Now let's address the challenges. We've discussed the tough comparisons in Vegas and the fierce competition in Macau, but what else is on their radar?
The earnings call brought up the elephant in the digital room. Online gaming.
Yes. The online gaming wave is it's sweeping the nation. Many states are embracing it as a new revenue stream.
But Wynn's CEO, he expressed some reservations. He's concerned about the potential cannibalization of revenue from their land-based casinos, and he's worried about potential regulatory backlash if online gaming grows unchecked.
It's a valid concern. Online gaming offers convenience, but it also carries the risk of problem gambling if not properly regulated. Wynn is wisely taking a cautious approach, weighing the potential benefits against the inherent risks.
They're not jumping in head first. They're carefully assessing the landscape before making any major moves. It's a complex issue with no easy answers, but it's something investors should consider when evaluating Wynn and other gaming companies.
So we've covered a lot of ground. Let's synthesize this information into some key takeaways for investors. What are the most important things to remember about Wynn Resorts?
First and foremost, they're a leader in the luxury gaming market with a proven track record of success. They're generating healthy cash flow, and they're actively returning value to shareholders through through dividends and share buybacks. That's a pretty solid foundation.
A strong foundation indeed. But what about the cracks, the potential pitfalls?
Those tough comparisons in Vegas are a real hurdle. The competition in Macau is relentless, and their UAE project, it's a high stakes gamble. They're also grappling with the potential impact of online gaming. These are factors investors need to carefully consider.
So it's a mixed bag, a tapestry woven with threads of opportunity and challenge. Wynn seems well equipped to navigate the ever-changing gaming landscape. But there are certainly hurdles to overcome. They're making strategic investments, expanding their footprint, and staying true to their luxury brand. It's a company worth watching. But before we delve into the investor perspective in part 3 of our deep dive, let's take a quick detour and have some fun with our "This is not financial advice" segment. All right, time to let our imaginations run wild. Remember, folks, this is purely for entertainment purposes only. We are not financial advisors, and this is all hypothetical. Don't make any rash decisions based on our playful musings.
Disclaimer delivered. Let's hear that outrageous yet plausible trade idea.
Okay. Let's say you're feeling really bullish on Wynn's long-term growth prospects, especially their bet on the UAE and those new gateway cities they're eyeing.
I'm liking this already. High growth potential, a dash of risk, classic Wynn. Go on.
Instead of just buying stock outright, how about a long-term LEP call option where we're talking years out, maybe even expiring in 2027 or beyond?
Whoa, now that's a bold move. LEPs or long-term equity anticipation securities are options contracts with expiration dates far beyond standard options. You're giving yourself a lot of time for your prediction to play out.
Exactly. If Wynn knocks it out of the park in the UAE and those new markets, those leaps could be worth a small fortune. But of course, there's a catch. Longer time horizons, they mean more uncertainty.
Yeah.
And if Wynn stumbles, those leaps could expire worthless.
High risk, high reward, the name of the game in this segment. Just remember, folks, this is all hypothetical. Don't go betting the farm on a long shot option trade.
Always gamble responsibly and seek advice from a qualified professional before making any real world investment decisions. Now that we've had our fun, let's get back to business. Join us for part 3 of our Wynn Resorts deep dive, where we'll analyze the company from an investor's perspective. Welcome back. Time to put on our investor hats and analyze what this all means for you. The discerning listener who wants to make those smart, informed decisions.
That's right. We've covered a lot of ground from, their performance across Vegas, Macau, and their big plans for the UAE, to their stock performance, capital allocation, and those intriguing little whispers about new ventures.
So let's connect the dots. Is Wynn Resorts a buy?
Right.
A hold?
Mm-hmm.
Or are those flashing red sell signs starting to blink?
Yeah.
To answer that, let's start by revisiting their strengths.
Okay.
What are they good at?
Well, Wynn is a leader in the luxury gaming market. That's undeniable. They have a strong brand reputation, a proven track record of success, and they're generating healthy cash flow. Not to mention they're actively returning value to shareholders.
That's a lot to like. But their focus on the luxury segment, I think deserves a little extra attention. We've touched on it before, but it bears repeating. Luxury consumers are less sensitive to those economic hiccups.
Yeah.
They're willing to shell out for those premium experiences, even when times are a little tough.
Exactly. And Wynn knows how to cater to this, to this discerning clientele. Think opulent resorts, world-class dining and entertainment, and those exclusive experiences that we talked about. The kind of things that just make you feel like royalty.
Yeah, let's flip the coin. Examine the risks.
Yes. Okay.
The gaming industry, it's inherently cyclical. Economic downturns can impact consumer spending, and competition is a constant shadow, just lurking behind every slot machine.
True. And Wynn is facing some specific challenges, those tough comparisons in Vegas, the intense competition in Macau, and the uncertainty surrounding their UAE project. These aren't insignificant hurdles.
So how do we weigh these risks against the potential rewards?
Yeah.
It's like balancing a scale with diamonds on one side and dynamite on the other?
Well, it all boils down to your individual investment goals and your risk tolerance.
Yeah.
If you're chasing high growth and the potential for big wins, Wynn might be a tempting bet. But if you're more risk averse, if you prefer a slow and steady climb, there might be, there might be safer havens for your investment dollars.
It's about knowing yourself as an investor. What keeps you up at night? What gets your heart racing? Once you have once you have a clear understanding of your risk appetite, you can make informed decisions that align with your with your financial goals.
Precisely. Don't blindly follow the herd. Don't chase the hype. Do your due diligence.
Yeah.
Understand the company. Understand the industry, and most importantly, understand yourself.
Now let's talk about Wynn's valuation. Is the stock overpriced, undervalued, or somewhere in between? It's a bit of a puzzle, isn't it?
Well, their recent earnings miss might make you think the stock is overvalued, but then you consider their strong long-term prospects and the massive share repurchase program, and suddenly it seems like a potential bargain.
Yeah.
It's all about perspective, your investment time horizon, and your belief in Wynn's ability to execute their strategy.
Right.
Let's look at some key metrics. Wynn's price-to-earnings ratio, or PE ratio, is currently 12.7. That's lower than the average PE ratio for the S&P 500, which is hovering around 18.
Interesting. So that could suggest that Wynn's stock is undervalued compared to the broader market.
Yeah.
But it's crucial to compare apples to apples.
Right.
Look at Wynn's PE ratio in relation to other gaming companies. Get a sense of of the industry as a whole.
Absolutely.
Right. Context is key.
Yeah.
We should also consider Wynn's dividend yield, which is currently 1.05%.
Not the highest dividend yield out there, but certainly respectable. It provides a steady stream of income for investors while they wait for the stock to appreciate.
So we've analyzed the strengths, we've dissected the risks, we've peered into the murky depths of valuation.
Yeah.
But the question remains: is Wynn Resorts a worthy addition to your investment portfolio?
The answer, as always, is it's nuanced. It depends. Wynn is a well-established company with a powerful brand, a proven track record of success, and a healthy cash flow. They're returning value to shareholders and strategically investing in their future.
But investors need to be acutely aware of the risks. The cyclical nature of the gaming industry, the fierce competition, the gamble that they're taking in the UAE. These are factors that can't be ignored.
Weigh the pros and cons carefully. Do your research. Read those earnings call transcripts. Dive into analyst reports, and most importantly, make an informed decision that aligns with your personal investment goals and your risk tolerance.
And this is where we leave you at the crossroads of opportunity and risk, armed with the knowledge and the insights to make a decision that's right for you.
Remember, this is not financial advice. We're just two curious minds exploring the fascinating world of investing. Seek out diverse viewpoints. Never rely on a single source of information, and always invest responsibly.
That's all the time we have for today's deep dive into Wynn Resorts. Thanks for joining us on Talk Tickers. We'll catch you on our next episode.